Thanks for joining us. I'm Marlin Bohling, your tour guide to the ag commodities, and let's take a dive into our grain trade, shall we? See if they're holding up where we were last time we looked. Well, on the corn board so far this morning, they just keep chopping around either side of unchanged. They're not very adventurous. They don't go very far the way it looks. December corn just up a half cent now at 538.5. Last time we checked, I think it was down 3/4. The March contract now just one tick higher at 547 per bushel. Let's check out our soybean trade today and see what's going on over there. In November soybeans, we're now currently 8 higher. We're at 1228.5 per bushel. That would put us about 7 cents off of our overnight high. January soybeans now up 9 cents at 1239 3/4. And again, that little reminder for you that we had no overnight sales announced this morning. About wheat in Chicago, December currently 3 higher at 759 per bushel. Here again, we've been on both sides of unchanged in the overnight and early morning trade. Looks like July is up 2 1/4. Kansas City has December 2.5 higher at 776.5. And you have it basically about 8 cents off of its earlier low. And we're about 6 cents off of our overnight high. Fairly wide range in that Kansas City market. You have July up 1.5 pennies, and that's for July of next year at 763.5 per bushel. Minneapolis wheat, we have December now trading 8 higher. We're at 10.21. Look at it go, way above $10 now. And July is up 4 cents at 938.25. Checking out our cotton trade, December is now 46 points higher at 108.72 cents per pound. It had gotten over $1.10 earlier this morning. Well, it's my pleasure to introduce you to our in-house guest. Mr. Chris Swift has joined us for his weekly visit. Thank you very much.
Yes, sir. Good morning.
How are you?
I'm fantastic.
How are things at Swift Trading in Nashville?
I tell you what, busy. Absolutely busy. There are so many things going on right now, and coming into the fourth quarter that we're having a hard time keeping up with it all.
You know, commodities are kind of the hot thing, aren't they, here the last year?
It is a big talking point now, especially since we've elevated in price and we've got energy prices up again today, new contract highs in the crude. The natural gas has taken off. We've got stories about fertilizer shortages out there. We're right in the middle of a great crop and a great crop harvest, and we're not down sharply on grains. I think that speaks volumes for the grain markets.
Well, look at that crude oil trade right now. You just mentioned that. West Texas Intermediate crude on December now up $1.47 at 85.23 per barrel. 85. Chris, I didn't like it when it got over 80 when I had to pull up to the pump there. I mean, it's hard to find anything under $3 anymore.
Note that price spread there, too, where you've got an inverted carry there, where you have absolutely the highest demand. And what was it, less than 9 months ago, we couldn't give the stuff away. So amazing what just a very short period of time and stifling a few entry points of oil into the United States, how quickly the price can rise.
You know, that's an excellent point, because it actually did have a negative number there for a while, didn't it?
Sure did.
That's right. We almost had a pool in the office here.
Different administration, different times.
Can we get some oil for minus $35 or something? All right, let's take a look at the natural gas price right now. And this, as you mentioned, can have a big impact on fertilizer prices. You know, it got down to $5 last week, and now November is all the way back up to 572.8. So we're up 44.8 cents right now on that November contract. So it looks like it's back heading higher again, and that could be detrimental to fertilizer prices for next year. Tell you what, pricing and availability is going to be a big, big concern here, and it's going to be a challenge to market next year's crop.
Oh, absolutely. It's already the biggest news that there is out there with China having cut off some of their supply line to us. It's going to be an issue.
Yeah, you bet. All right, we'll come back in just a moment, and I want to talk with this guy right here about what's going on in our livestock trade. He'll know all the ins and outs about that cattle on feed report. We'll discuss coming back. Well, we're talking with Chris Swift right now. He's in studio with us, and he mentioned the cattle on feed report that came out last week. We have those numbers for you, and I wanted to get his thoughts on how much impact that could really have here on the trade. So the on-feed number very close to expectations at 99%. The placements came in at 97%, and that was almost 4.5% lower than expected on the average trade guess. And the marketing's number at 97% was just right in there where they thought it would be. Let's look at our current prices, and we'll get some commentary on this. Let's go to live cattle. Well, we're higher across the board, and pretty solidly so, I would say. December live cattle up $1.42 now at $129.75, and February up $132 at $134.82. Big solid gains all across the board there. Then you get to the feeder cattle. Now, feeders, when we first looked at it this morning after the open, we had November way over $2 higher. Now we're $1.50 higher, and now $147 higher, so we seem to be sliding a little bit. $158.37 is our last trade. So we're up about $1.50 basically from Friday's close, but on Friday, if you recall, Chris, we were over $2 lower. Mm-hmm. Is this a disappointment in your opinion?
No, not really, because we got a flash higher this morning. Everybody's kind of tilted the boat on the opposite side on Friday. They see that the numbers came out. But what we're looking at is this is a change in the cattle cycle. So we have seen enough liquidation now over the last 6 to 8 months. We saw a 2% increase of the heifer placement on this past inventory report. On feed report. We saw the cow kill continue to be elevated. And so now we're shrinking in numbers, and we're not going to expand anytime soon with the Northwest still in a drought. So potentially for the remainder of this winter and through the fourth quarter, you're going to see a slight amount of liquidation, but you're going to probably place fewer fed cattle on feed. We thought that we would see that in October, but seemingly it may have started a month earlier.
Can you explain what the numbers mean on that cold storage report that came out? Because we had the beef and the pork numbers. If you compare them to what we had a month ago, everything was higher. You compare them to a year ago, and the numbers were all lower. So what does that mean to the trade?
You know, I'm not real sure, but I think at times what we see is we build up stockpiles into those cold storages, and then we export that meat out. And because some of our exports have been higher to China, I think maybe that's what we're seeing the month-over-month stuff is where we're packing up some inventory, getting ready to market it, to export it over to China. Some really interesting things in that export market that are going to be coming up soon between Brazil and China, and going back to the summer when they had some of their BSE issues. So I think that that's going to expand on the market a little bit more as we go forward.
Let's look at the lean hog prices then right now and see how they're holding up. Just kind of holding their own. December 52 higher now at 73.85, and you have February 20 cents higher at 76.82. The deferred's just kind of mixed. Well, thanks for coming in, Chris. Always good to talk
Absolutely.
with you. Appreciate
Pleasure.
it. Welcome back anytime.
Thanks.
Chris Swift, Swift Trading right here in Nashville. Janet, back to you.